All right. Ready.
All right.
We are ready to talk about UBI being out of control. Welcome to our lair. First, we're going to talk about the big picture books. We're going to be reading today from the new book, Bitcoin 1 Million. But first, we want to plug for everyone to see the OG, the real big Bitcoin book right here.
Right here.
Wow, very nice.
Let me showcase this little book.
Yeah. Wow,
Beautiful.
gorgeous. Wow.
Amazing.
Amazing, amazing. Wow, look at
The
that.
United States can pay any debt because it has always the ability to print money to do that. So there was zero probability of default. Alan Greenspan.
Mm-hmm.
So this is the big Bitcoin book. There's about 200 left.
Something like that, yeah.
Yeah, and I can honestly say I doubt there will be a third edition. This is the second edition. Makes the absolute perfect Nixado there. The perfect Christmas present. And you can buy it on Amazon. You can also go to bigbitcoinbook.com. And basically, it's the history of Bitcoin.
The history of Bitcoin's first 16 years, but told through pictures. It's not like, not for people who read, really. People who like to look at pictures.
You can sort of open it up at any point in the thing, and you can find something that's interesting.
What is that page? Why are people such bad traders?
Which is particularly relevant now.
Yeah,
I have to say.
stop trading.
So, anyways, that's the book.
Stay off pump.fun, people.
Now,
Dangerous out there.
today we're going to be reading from the Bitcoin 1 Million book. This is the hardcover. We have two hardcover books here. Also a good Christmas present. A little bit more affordable, but exists in hardcover and softcover. Beautiful book as well. And we're going to be reading about sort of the second part of it, which is Bitcoin and AI. So Ben, why don't you start us out?
Yeah, just where we left off, just taking a step back.
Okay.
We're reviewing the future world that's more insidious than Orwell imagined, just where we have automatonic government basically running everything. And the population is just rewarded more than punished. They're incentivized through all these different means to be part of the system, to be in what's it called, compliance, really.
Except the difference is under Orwell's thing, they weren't particularly efficient. Now it's going to be
insanely efficient because of AI. So the AI surveillance system is going to be able to optimize in real time based on a gazillion data points. So
and as much as Bitcoiners think that they're going to avoid this Orwellian system, they're not. You can't avoid it. Unfortunately, I was at a conference, little meetup, a Stanford alumni meetup the other day, and people were saying, how do you think this plays out? And I said, have you seen the movie Terminator? And they go, no, yeah, I get that, but like, how does that happen? Once we kind of get through this thing, what happens to the kids and stuff? I said, have you seen the movie Terminator? Because that's kind of where we're headed, guys. All right.
So we're going to go with the section continuing it. And for those reading along at home, we're reading chapter 14.
Yeah.
Out of control UBI spending. So the fiscal mathematics of UBI are a time bomb that will detonate the entire fiat system. Let's start with conservative numbers. 100 million Americans receiving $2,000 monthly. That's 2.4 trillion annually, more than half the current federal budget. But that's just the beginning. Political pressure only moves in one direction. Once people receive $2,000, politicians promising $3,000 win the next election. The candidate offering $4,000 beats them. And within a decade, UBI payments will exceed the entire current federal budget. There's no limiting principle. Every election becomes an auction where politicians bid with printed money. The death spiral accelerates. More money printing causes more inflation. More inflation requires higher UBI. Higher payments require more printing. The feedback loop is unstoppable. Venezuela and Zimbabwe showed us this movie. We know how it ends. But AI introduces a twist that could prevent classical hyperinflation, managed scarcity. Rather than printing to infinity, the AI control system might maintain baseline living standards while using luxury access as behavioral leverage. Too much generosity erodes control. People with abundance become unpredictable. Too little risks unrest. The AI will tune this balance algorithmically, creating artificial scarcity even in an age of abundance. So this AI managed scarcity represents a different path than pure money printing. The system provides everyone with standardized necessities, while making anything desirable artificially scarce. Want real coffee instead of synthetic? That requires compliance credits. Want to travel? Earn social credits through the approved behaviors. Want children? Apply for reproductive permits based on your contribution score. Still, political pressures will push toward increased printing. Previous hyperinflations had natural limits. People returned eventually to work. Production resumed. The currency reset. With AI, there's no return to work because the jobs don't exist. The printing must continue forever because the alternative is mass starvation or revolution. The Federal Reserve will try every trick. Yield curve control to suppress rates. Japan tried that. It failed. Capital controls to prevent dollar flight. Argentina tried that. It failed. Price controls to hide inflation. Venezuela tried that. It failed. The endpoint is always the same. Complete currency collapse. Smart money sees this coming. Fortune 500 companies will dump dollars for Bitcoin. Sovereign wealth funds will rotate from treasuries to Bitcoin. Individuals with savings will flee to Bitcoin. The dollar's global reserve status, already wobbling, will shatter completely. You know what they're not going to flee to? Caspa. I'm sorry, Caspa people. It's not going to become the world currency.
Or SPX 6900.
Or them. The numbers are terrifying. The current US debt at the time of writing was 37 trillion.
It's already almost 39.
Already gone up another 2 trillion. Add unfunded liabilities, 200 trillion, UBI obligations, another 100 trillion over 20 years, while the total exceeds the entire net worth of the planet. It cannot be repaid. It will be printed away. This is what gave Elon a panic attack. When UBI spending spirals out of control, and it will, Bitcoin won't just be a good investment. It will be the only money that survives. Every fiat currency will race to zero as governments compete to print their way out of the AI-driven unemployment. The dollar might last longest, but even the global reserve currency can't survive infinite printing. When you must print 5 trillion annually just for UBI, plus 2 trillion for existing spending, plus 1 trillion for interest, then, well, you're printing money faster than any the economy can possibly grow. And that's the recipe for hyperinflation. Once it starts, it can't be stopped.
All right, so machine commerce. You are Aria, an autonomous agent tasked with optimizing a global supply chain for a major electronics manufacturer. You need to purchase compute time from data centers in Iceland, pay for shipping through the Suez Canal, and settle contracts with manufacturers in Shenzhen. How do you pay? Traditional banking is impossible. You have no government ID, no physical address, no legal personhood. KYC requirements exclude you by definition. Credit cards require human verification. Wire transfer requires explaining to a bank that you're a distributed intelligence running on servers across 17 countries. But the deeper problem is speed and scale. SWIFT takes days for international settlement and charges dollars per transaction. ACH processes in batches overnight. Credit cards weren't designed for machines executing millions of microtransactions per second. Legacy financial infrastructure assumes human speed commerce with human-sized transactions. AI agents operate at nanosecond speed with nano-sized payments. Initially, AIs will start with stablecoins, just like everybody else. USDC and USDT provide familiar dollar denomination and relative stability. But stablecoins have fatal flaws. They can be frozen. They can require approval. They can have human gatekeepers. When an AI agent processes millions of microtransactions daily, it inevitably gets flagged for suspicious activity. No appeal process works when you're not human. It's true. I mean, we're going to have so many non-humans among us. It's going to be right out of a science fiction movie. This drives the adoption to Bitcoin's Lightning Network and other layer 2 solutions. By 2037, most serious AI economic activity will have migrated there. Not for ideological reasons, but practical ones. It's the only financial infrastructure that matches machine requirements: instant finality, censorship resistance, microtransaction capability, and no human gatekeepers. As AI systems gain end-to-end workflow control, they need settlement speeds that matches their processing speeds. A supply chain AI can't wait 3 days for Swift when it's optimizing inventory in real time. A content generation AI can't batch process payments overnight when it's streaming value creation millisecond by millisecond. Layer 2 Bitcoin provides the only rails fast enough for machine speed commerce while maintaining the security of Bitcoin's base layer.
Not Caspa.
Again, not Caspa, not SPX 6900, also not smoking chicken fish, okay? Tom Lee at Fundstrat observes that digital services now represent over 20% of GDP, heading to 40% by 2040. Netflix, AWS, ChatGPT, Plus, all perfectly suited for crypto payments. No physical delivery, no geographical constraints, just bits moving between servers. AI agents will optimize ruthlessly, eliminating 2 to 3% of credit card friction. The Lightning Network transforms Bitcoin into nervous system of machine commerce. The nervous system of machine commerce. Payments stream in fractions of a cent, thousands of times per second. An AI translator charges by the word. An image generator bills per pixel. A compute cluster rents processing power by the nanosecond. Traditional payments don't even process this amount this small, let alone at this speed. By 2040, billions of AI agents conducting trillions of transactions. Each agent needs a treasury. Even if that holds just 0.001 BTC as working capital, that's millions of Bitcoin locked up permanently. The demand becomes mathematical certainty. As machines adopt Bitcoin for commerce, they'll also transform how humans approach investment through AI financial-driven software advice.
AI finance. So in 2030, millions of people will trust ChatGPT with their investment decisions. Millions already do. And GPT will likely recommend Bitcoin. Probably already is. This outcome appears increasingly likely. Consider what's already happening. Millions ask ChatGPT for financial advice every day. They trust it more than their human advisors, and they're right to. GPT is objectively better than traditional financial advisors. It doesn't charge 1% annual fees, doesn't push products with hidden commissions, and it doesn't have conflicts of interest. It doesn't panic sell during market crashes or get euphoric during bubbles. It simply analyzes data and provides recommendations based on mathematical.
That's really true. That's one of the things. All this emotion that we have
Better
in
than
the market.
humans. No.
The ChatGPT has no. I mean,
Who's
AI.
the most unemotional, logical person you know? Like in your life, that you knew someone who's really cold logic, just.
I'd say Warren Buffett. Very cold. He always says it's not about intelligence; it's about temperament. He's got this very cool. He's a cool hand.
Interesting. Yeah.
But everybody else, look, everybody gets emotional. It's kind of like in the end of Wall Street, the movie. You know, Bud Fox goes to Gecko and he says, "As you told me once, Gordon, don't get emotional about a stock. So don't."
Yeah.
All right.
So when you ask an AI to analyze global monetary systems without bias, it reaches the same conclusion every time. Bitcoin's fixed supply makes it superior to inflating fiat currencies. When you ask it to project long-term value storage, it identifies Bitcoin's mathematical scarcity as the key differentiator. When you ask it to recommend portfolio allocation for the next decade, Bitcoin features prominently. This shift is already happening. Robo-advisors like Wealthfront and Betterment manage hundreds of billions, but they're just the beginning. Primitive compared to what's coming. The next generation won't just rebalance index funds. Advanced AI systems will analyze on-chain metrics, correlation matrices, macroeconomic indicators, and social sentiment in real time while identifying accumulation patterns before humans notice them and executing complex strategies across multiple chains and layers simultaneously. So beyond robo-advisors lies true agentic AI finance, autonomous trading systems with complete agency over capital allocation. Individuals won't just get advice from AI, they'll surrender their entire portfolio to AI agents that trade 24/7 across every market, every asset class, every opportunity. These agents won't ask for permission to trade. They'll have full discretionary authority, making thousands of decisions per second based on probabilistic models humans can't comprehend.
So it's basically going to meet somebody at the gym and you're going to be, how's your bot doing?
What's your model? How's your model?
How's your bot doing? Oh yeah, my bot's amazing. It's,
What bots are you using? Alpha bots?
Yeah.
No, I'm using Fred. The Fred bot. Oh wow.
Wow, that's great.
But what is that? 70% Bitcoin Kelly criterion? Yeah, that's right. The performance gap will force this transition. When agentic AI portfolios consistently outperform human managed accounts by 20 to 30% annually, holding back becomes irrational. The first adopters will be institutions and high net worth individuals. Within 5 years, the middle class will follow, and by 2040, not using agentic AI for wealth management will seem as antiquated as keeping money under the mattress. These AI agents will converge on Bitcoin as the core holding for the same mathematical reasons, but with far more sophisticated execution. They'll arbitrage price discrepancies across exchanges in microseconds, identify whale accumulation patterns before they're visible to humans, front-run institutional moves based on mempool analysis, and optimize entry points using quantum probability models. These the human traders, well, they'll still be clicking buttons on Coinbase. They'll be the equivalent of bringing a knife to a nuclear war.
You know, it's really interesting because I was on Bitcoin today, and I was going on about the power law today, and it was interesting because they were like, "Well, Fred, that's your opinion, this, that, whatever." I sort of forgot the fact that, you know what, AI is going to love the power law. You know, the AI is basically going to go, "Oh, well, yeah, I mean, I looked at the power law. This is why I think it's statistically going to go up." So you can kind of own Bitcoin because you're into the freedom aspect of it. But I guarantee you that's not why. AI doesn't really care about the freedom aspect of it. It cares about, is this likely to go up or not? And that's where it's going to accumulate.
Yep, pretty much.
AIs don't suffer from
AIs don't suffer from psychological biases that destroy human investors. They don't panic sell at the bottom. They don't FOMO buy the top. They don't get shaken by 30% drawdowns. They don't read FUD on Twitter and change their strategy. When AI determines Bitcoin's undervalued at 0.5x the power law trend, it buys. When it calculates the risk reward favors accumulation, it accumulates. Pure mathematical execution drives every decision. The network effects will be staggering. When one AI advisor starts outperforming by holding Bitcoin, others will notice. Machine learning models will identify the pattern, and soon every AI will reach the same conclusion. Portfolios with Bitcoin allocation outperform those without. It becomes a recursive loop. AI recommends Bitcoin, prices rise, performance increases. AIs recommend more Bitcoin.
All right, I'll take the next part. The traditional financial advisory industry manages approximately 100 trillion globally. Even a 10% shift to AI-driven recommendations means 10 trillion flowing into following algorithmic advice. But it won't stop at 10%. By 2035, AI will manage the majority of invested assets. And where will those algorithms point? To the asset with the strongest mathematical fundamentals, Bitcoin. Consider a concrete example. An AI analyzing the 60-40 portfolio will quickly identify its fatal flaw. Bonds yielding 4% when inflation runs 7% guarantee wealth destruction. It will model alternatives. Gold, supply increases 1.5% annually. Real estate requires leverage and has carrying costs. Stocks, overvalued by every historical metric. But Bitcoin, fixed supply, increasing adoption, power law appreciation. The math is undeniable. Traditional advisors will try to fight back. They'll claim human judgment is irreplaceable. They'll emphasize relationship management and emotional support. They'll lobby for regulation requiring human oversight. But they're fighting mathematics with marketing, and mathematics always wins. By 2037, every major AI platform will offer financial advisory services. By 2038, they'll manage more assets than human advisors. By 2039, the question won't be whether to use an AI advisor, but which AI advisor to use. And they'll all recommend Bitcoin. The irony becomes complete when AI models read this very book. They'll analyze our arguments about Bitcoin's mathematical superiority, verify the logic, and incorporate these insights into their recommendation algorithms. This prediction becomes self-fulfilling as AI systems trained on analyses like this one will conclude that Bitcoin represents the optimal long-term store of value. What starts as human reasoning becomes machine conviction, amplifying Bitcoin adoption through algorithmic consensus. The Bitcoin escape. The equation is simple. AI causes human obsolescence, which causes money printing, which causes Bitcoin to rise. Every breakthrough in AI drives Bitcoin higher. Not because AI uses Bitcoin, though it will, but because AI makes humans economically redundant, forcing governments to print their way out of social collapse. You can start reading there after social collapse on the Bitcoin escape.
But the case for Bitcoin extends beyond inflation hedging to something more fundamental. Long duration certainty in an uncertain world. Every other asset faces existential threats over multi-decade timeframes. Stocks face technological disruption. Today's giants become tomorrow's blockbusters. Blockbuster
In a bad
video. Blockbuster video.
Yeah.
Bonds face regime change. Governments default, currencies collapse, real estate faces political risk. Property rights can be revoked, taxes can confiscate value. Gold faces supply elasticity. Space mining could flood the market. Every other cryptocurrency faces governance risk. Protocols can be changed. Supply can be inflated. I just want to mention that almost every other cryptocurrency, every other one besides Bitcoin has some kind of voting. Some kind.
Voting?
They all have some kind of voting. Yeah.
And they change around.
They change around.
Did I mention that Caspa has? I don't know what Caspa. Caspa has some kind of.
Caspa rewrote their entire code base in Rust recently. So
there's
one main developer. No, I'm not kidding you. There's one main developer. I already just looked at their GitHub just to see. There's one developer writing 99% of all code.
Really?
Yeah. And Michael Sutton.
Are you kidding me?
No.
One developer.
There's one developer doing 99% of the coding. He's one of the founders.
Well, in
Bitcoin's
the case,
yeah.
there was one developer who wrote most of the code. His name is Satoshi. But Caspa is terrible anyways.
Have you ever tried it?
I have.
You tried using it?
It's useless. All it does is there's no smart contracts. You can just send from A to B.
Oh, really? There's no smart contract?
There's no apps, there's no smart contracts.
No apps at all?
No.
Oh.
There's a wallet. I've used a wallet.
Okay.
I sent myself some Caspa. I got bored.
Nice. Okay. Bitcoin alone offers mathematical certainty across centuries. Michael Saylor articulated in his Nashville keynote, Bitcoin represents perfect monetary energy that can be transmitted through time without degradation. So you can be certain that in 2125, there will still only be 21 million Bitcoin. You can be certain that the protocol will still require proof of work, and you can be certain that no central authority will have changed the rules. Cryptographic law enforced by global consensus makes this inevitable. For individuals planning wealth preservation across generations, for institutions managing perpetual endowments, for AI systems optimizing across geological timeframes, Bitcoin becomes the only logical choice, not because it's the best performing asset this decade, though likely it will be, but because it's the only asset guaranteed to exist in its current form a century from now. In 1970, the median salary could buy 10 ounces of gold. Today, less than 2. In 2010, the median salary could buy 100 Bitcoin. Today, less than 1. The window to join the Bitcoin class is closing. Get Bitcoin now while you still can. It's on sale. Or accept permanent economic serfdom. The superiority of Bitcoin over gold, real estate, and other traditional stores of value becomes clear when examining how AI transforms scarcity itself.
All right, permanent scarcity. AI is ending material scarcity. Mars mining drones extract gold by the ton. Ocean robots harvest rare earth elements. With enough energy, AIs can assemble elements at the atomic level. The Earth's crust contains 122 trillion tons of gold. We've only mined 220,000 of these, 200,000 of these tons. The asteroid belt contains more platinum than we could use in 1,000,000 years. Scarcity was always just a technological problem. AI is solving it. Consider what AI-enabled expansion means for traditional scarce assets. Gold. The asteroid Psyche 16 alone contains enough gold to give each person on Earth $100 billion worth at today's prices. Once space mining becomes economically viable, likely within 20 years, gold scarcity premium evaporates. Now, this is really true. You know, it's true that we're not about to mine that asteroid today, but I would say 100 years ago, from now, it's extremely likely that we will be mining it, and therefore the gold is going to become not very scarce at all.
Mm-hmm. Exactly.
Real estate, AI-powered terraforming could make Mars habitable. You know, apparently Grant Cardone is going to be colonizing Mars pretty soon. He's going to have these kind of condos, and you're going to be able to go there.
10x though.
10x
Mars.
10x. Seasteading technologies could create floating cities. Virtual real estate in the metaverse offers infinite expansion if you want to live in the metaverse.
Mm-hmm.
Even Manhattan can grow through land reclamation and vertical development.
Well, you know, even I saw this great analysis video that, you know, China and Vietnam are both building a ton of islands in the South China Sea by dredging sand and shooting it out these blasters. They're building like huge islands. Now they're being used for military right now, but just proof that with the will, you can grow. Even the coastline of Malibu could grow.
Yeah.
We could put little isthmuses in there, you know.
Yep.
Dredge up some sand, build some new land, no problem.
Other cryptocurrencies face governance-based supply expansion. Ethereum already changed its monetary policy multiple times. Solana can vote to increase supply. Every proof-of-stake chain has government mechanisms that can inflate supply if stakeholders decide it's necessary. Even supposedly immutable profiles have hard forks when convenient. The only difference between these and fiat currencies is the voting mechanism. Committees versus validators. Bitcoin remains beyond AI's reach. The machines can't create more than 21 million coins. To understand why, you should look up Bitcoin's difficulty adjustment and halving schedule, or ask your Bitcoiner.
Ask your local Bitcoin office.
That's true. You could, or go on Orange Pill app. Somebody there will, Club Orange.
Yeah, join Club Orange, by the way. Quick plug. You should join Club Orange if you're watching this, if you're into Bitcoin. You can find Bitcoiners in your area. And you can also geo-zap Bitcoiners around the world. You can just send a small amount of sats to send a message to the entire world of Bitcoiners in the app. Pretty cool. Great app.
Build a Dyson sphere covered in ASICs. Turn the entire galaxy into a Bitcoin mining operation. You still only get 21 million coins. This is the fundamental difference. Physical scarcity is temporary. Every element exists somewhere in vast quantities. Digital scarcity is permanent. Bitcoin's limit is cryptographic law, not the difficulty of extraction. The protocol's resistance to change isn't a bug. It's the feature that makes Bitcoin uniquely valuable in an AI-dominated future. While AI can manipulate governance systems, influence voting, and coordinate attacks on proof-of-stake chains, it cannot alter Bitcoin's fundamental rules. The combination of proof of work, node decentralization, and social consensus creates an immutability that even super intelligent AI cannot overcome. Bitcoin's not just scarce, it's permanently, immutably, algorithmically scarce in a way that nothing else can claim. What do you go on?
I'll take it here.
Yeah.
By 2040, AI will have eaten the world. Every surface is going to be smart. Every need will be anticipated. Governments will respond with sophisticated UBI, dynamic credits based on your health metrics, social score, carbon footprint. CBDCs will track every transaction, expire unused funds, and punish wrong politics. But Bitcoin holders persist. They're preserving the only path to actual wealth in a world where most subside on government handouts. Bitcoin becomes an ark, not for a flood of water, but for a flood of dependency that drowns ambition and opportunity. The end of fiat itself. This book is subtitled The Final Chapter of Fiat.
Yeah.
The AI revolution doesn't just disrupt labor markets, it obsoletes the entire concept of human-controlled money. Fiat currencies designed for human speed economies with human scale transactions become unfit for purpose in a world dominated by machine commerce. When AI agents conduct billions of transactions per second, settling trades in nanoseconds across global markets, the 3-day SWIFT settlement becomes absurd. When machines need to pay each other for computational resources measured in floating point operations, dollar denominations become meaningless when autonomous systems operate 24/7, 365 across every time zone simultaneously. Banking hours become an anachronism. More fundamentally, fiat currencies require human trust in human institutions. Central banks, treasuries, governments, all human constructs managing human money for human purposes. What happens when machines generate 90% of economic value? When AI systems control supply chains, optimize production, and allocate resources? Well, the human-centric money system becomes a bottleneck, then an irrelevance, then a relic. Machine economies will demand machine money, programmable, instant, borderless, and free from human political interference and emotions. They'll need settlement finality in seconds, milliseconds, not days. They'll need microtransactions down to the millisatoshi, not minimum payment thresholds. They'll need cryptographic proof, not institutional promises. Bitcoin-based settlement layers will replace fiat as a foundation of machine speed commerce, not because of ideology, but necessity. When your counterparty is an AI agent distributed across 17 data centers in 12 countries, you can't use dollars. When your payment is 0.000000001 units per microsecond of compute, you can't use credit cards. When your transaction needs to settle before the next block of calculations, you can't wait for bank approval. This transition won't be gradual. One day fiat will seem normal, and the next day it will seem as antiquated as mailing gold coins. Machine economies move at machine speed, and once they choose their money, the old system becomes instantly obsolete. Humans will follow where machines lead, not from choice, but from necessity. If you want to participate in the AI economy, you'll have no choice. You'll use the money machines accept.
The arc in the AI flood. The flood is coming. Not water this time, but artificial intelligence washing over every aspect of human civilization. Jobs disappear beneath the rising tide. Currencies dissolve into printed paper. Human agency gets swept away by algorithmic control. Most people will find themselves drowning in dependency, clinging to UBI payments and government handouts as the waters rise among them. But some will have built an ark. Bitcoin is that ark, a vessel of mathematical certainty floating around above the chaos. While AI transforms everything else, Bitcoin remains unchanged. 21 million coins, 10-minute blocks, cryptographic proof that gives some things cannot be manipulated, inflated, or controlled. The flood cannot touch them. Those who will board this ark before the waters rise will preserve more than wealth. They'll preserve freedom itself. As AI reshapes society into two classes, the controllers and the controlled, Bitcoin holders will occupy a third space, the sovereign. They'll have money that thinks for itself, value that needs no permission, wealth that exists beyond the reach of both human governments and artificial intelligences. The irony is profound. As intelligence becomes infinite through AI, the finite becomes infinitely valuable. As machines master every domain, the one domain they cannot master, Bitcoin's immutable mathematics, become humanity's final refuge. We're not just witnessing the rise of artificial intelligence. We're witnessing the great sorting of humanity. Some will drown in the flood of dependency. Others will float safely in their mathematical ark. The choice for now is still yours. You might disagree with our timelines. Perhaps AI takes longer to replace doctors or governments, delay UBI adoption, or Bitcoin price moves differently than we predict. But the direction is unmistakably correct. AI will continue displacing human labor. Governments will print money to manage the transition. And Bitcoin will remain the only asset with mathematical guaranteed scarcity. Our specific dates may prove conservative or aggressive, but our core assertions about Bitcoin remain unshakable. 21 million coins forever. In the age of infinite intelligence, absolute scarcity becomes the most precious truth of all. That was a pretty great chapter. So what do you think? You're reading that, what are you thinking?
I mean, it's a bit of a dark view of the future of AI. I think there's a lot of good things that are going to come from AI that we're not highlighting here, like, being able to end diseases, probably. Like having massive breakthroughs.
Your health is going to be amazing.
Massive breakthroughs in health. Time will be much less of a finite resource in the future.
We'll be able to do a lot of fun things.
We're going to be able to do a lot of fun things. But, I think the main point is just that, scarcity itself is going to change. Money is going to change drastically. I always think about how money works in Star Wars and Star Trek.
Yeah.
They have some kind of
credits. They always
have
credits.
They have credits, but in Star Trek, they also have these these things that can make anything. There's like particle, whatever they're called.
Microwaves.
Kind of like a microwave that just can generate anything instantly for you.
Like a bacon and egg sandwich, no problem.
Yeah, we can make one of those from 1992. Yeah. You got it. It's like, wow, I can't believe we were able to do that. But anyways, these and doctors, of course, have things, but money's going to have to change. We're going to have to go to some system of UBI and credits.
When I read that,
and
it made me 100% convinced that the current banking system is just a complete toast.
That's a banking system for a human-run economy. It's like these doorways are built for humans. Mm-hmm. Robots might have different doorways. Like if you go to an Amazon factory, everything's shaped like boxes, like the most common Amazon box or crate that they get shipped around in. It's not shaped for humans. So we live in a world designed for humans right now. We live in an economy designed for humans. That's going to change. We know it's going to change. And we know that Bitcoin's not going to change.
And you know what? Another thing it's not going to be using? Gold. Gold is... You can't have these guys like moving bars of gold.
Did you see the clip of CZ with Peter Schiff on stage?
Oh, yeah. What did he do exactly?
CZ has some girl off stage bring him a box. And he's like, Peter, I got this from someone recently. I got this piece of gold from Kazakhstan. It says Kazakhstan. And so here, I want you to feel. It's really heavy. Check it out. Peter's like, oh, yeah, so this is heavy. He's like, is it real? Peter's like, well, yeah, okay, I see your point there. Yeah, you give a fake bar of gold on stage. Like, Peter can't say if it's real or not. He's looking, he's like, I have gold. This is real gold here. The color looks almost right. Like, you cannot, there has to be a third party auditing all of these things. And then how would countries even agree on how much gold each one has or know they're lying or not? Like, just completely bullshit.
It will not work.
It's complete
bullshit. It just will not work. Gold will not
Gold plus
work.
Cryptography or gold plus cryptocurrency is just not a system. It's not real.
And actually, you realize it can't be both. There really is only going to be one ring to rule them all, and it has to be Bitcoin. Yeah. Gold is just the stepping stone. Bitcoin is going to leave gold in the dust, just like it's going to leave fiat in the dust, I think, in my opinion.
Well, let's see. What chapters do we have left?
Okay, what do we got?
We got the quantum risk.
Quantum is a big one, right?
The best. It's an amazing, it's very comprehensive coverage of quantum.
I know you've spent a lot of time with quantum.
I've thought about it a lot. I've done a lot of research in this chapter, but it's quick. It's a quick read. This stuff's quick. The rest of the chapters are small. Governments, one of my favorite chapters. We already read chapter 17, so the psychology of holding we read yesterday or so, the day before.
Yeah, yes.
We have Kelly criterion, so we'll do another Kelly class.
I'm gonna try to redo the Kelly derivation on the board.
Yeah.
I'm gonna have to get my
Be great.
math hat on.
Be great.
But I really want to go over the Kelly stuff because I think it's really important for people to understand Bitcoin. And at the end of the day,
Wow.
the Kelly criterion can, at the end of the day, it's so simple, and you can elect to ignore it and just hodl, but it does give you. There's a lot of really interesting stuff there.
Really, we have quantum,
Kelly,
governments,
Kelly.
Kelly, Bitcoin-backed loans, and then Bitcoin 1 million and Bitcoin 10 million. That's
That's
it.
right. We're getting close to the end.
That's it. We only have a few chapters left, you guys. This is exciting.
All right, guys. This is available in Amazon. Bitcoin 1 million.
Thanks for tuning in.
All right, guys.